This conference will now be recorded.
Okay, good evening, everybody. This is Greg Morton. It is Saturday, January 29th, 2022. This is the weekend update for Canslim growth stock investors / position traders, brought to you by the Greenville Eastside IBD Meetup Group and the Stockyard Meetup Group, which are the two meetup groups that I run. As always, this is for educational purposes only. Go make your own mistakes. Don't copy mine. Write your rules, follow your rules, rewrite your rules. We know, a lot of people know now, that all investing has substantial risk of big losses. So want to learn first and only then invest. And of course, I'm not recommending any stocks or security to buy, sell, or hold. So topics for today. Look at the M factor. I'm going to say it's still a train wreck for the fourth week in a row. Current trading plan, still risk off environment, picking up pennies in front of a steamroller, but maybe better soon. We'll talk about that. Watch list remains pretty trashed, kind of non-existent, except for those stocks in the oil and gas sector if you're someone that can rotate well to commodities and trade commodities. And then we'll look at our educational monthly meetings. So the M in Canslim, as everybody's sort of realizing now, is the most important letter in Canslim because it just doesn't work when the M factor is not headed in the right direction. So O'Neill tells us to look at three things, and they have an order of priority to them. First is the action of leading stocks. Second is actions of stocks owned, which is not very many and perhaps none at this time for people that are 100% cash. So that tells us something about the market. And we look at the market pulse, distribution day count, price and volume on the indexes, as well as the supplemental tools that I use. So let me see. Our leaders that we've been watching, we talked about the last big growth trees perhaps getting chopped down. Netflix, of course, took a serious dive this week. Google will have earnings coming up. Microsoft, you have Tesla, got slammed down through the 10-week down to the 200-day or the 40-week line. Apple is the one, kind of held up and made a little bit of progress, but overall the picture is more dim than it is bright on those last big cap leaders that have been holding everything up. And of course, the prior growth leaders, they're just burning in the fire still. Peloton off 83%, Shopify 50, Zoom 67, Upstart 77. Just take your pick. These are nasty, nasty. ARC's off 57%. I added them this weekend just to put that in there. IBD50 is off 29%, and the IPOs recently from last year and even going back a little bit further pretty much just look trashed across the board. Those charts that are in the institutional due diligence phase have some work to do, I guess is the way to say that. And then O'Neill tells us that the true market leaders fall 70%, 72% on average off the top. And you can see, some of these are helping keep things at average. Upstart's more than that, Peloton's more than that. So we've seen some really big dives there. So let's go over, we'll go to MarketSmith, look at the indexes, my coloring book, the Excel spreadsheet, as well as the group teaching portfolio. So let me get out of here, go look at the indexes in MarketSmith. So this is the NASDAQ. So Monday, we did have a rally day, that reversal day, as you can see there. So Friday was day 5. We have not had a follow through day. The NASDAQ came down, 19.2% off the high. So almost bear market territory. And 12,159 would be 25% off the top. And I just put that in there for reference. All the moving average lines are pointed down now. They're not stacked in the correct order. They're reversed, except the 50 hasn't crossed the 200 yet. Solidly in correction territory. That's the 10% line right there. And the RS line is still going down. So that doesn't look good. S&P 500, same thing, came almost down to, sorry, it didn't load. Try again. Okay, so no, it's more closed in correction territory one day, and is back up trying to retake the 200-day line. So it is not down near the 20% line yet, but the moving average lines have crossed over or pointed down. So it's showing the weakness. NYSE, all the indexes are under the 200-day moving average lines. I mean, that's like you tell your kids, nothing good happens after 11 p.m. Well, nothing good happens under the 200-day moving average line either. Dow under the 200-day came down to correction territory and did bounce off of that. Russell, worst of all, actually closed this week in bear market territory. There's your 20% line. Moving average lines are just dive bombing down. RS line, same thing, looks bad. It's a lot of weakness out there. S&P 600, kind of in the middle between bear and correction. So RS line's not diving quite as steep. So this one probably has more financials, so maybe it's been holding up a little bit better. And then if we look at my Excel spreadsheet, main thing is just starting off, I only have 6 buying days and 13 selling days in the 25-day window. So it's, as Mark Minervini talks about, it's more of a distribution dominant tape than an accumulation dominant tape. We have 5 distribution days on the NASDAQ. IBD stops counting once they go into correction, but I still count. I want to know how heavy the load is. We actually even had clustering, which was 4 and 8 is clustering, so that the NASDAQ had 4 within a 7-day window actually. So that's kind of like distribution on steroids. Everything's red on the MMTS. Market school exposures at 0. IBD column's red. The window of opportunities closed. So all the things I use to track market direction are the wrong color right now. And of course, on the Fed, we had what I'm going to start calling these Fed Wicked Wednesdays or Wicked Fed Wednesdays, because we started out the year, that's what happened. We got the Fed minutes on Wednesday of that first week of the year, and it just creamed the markets. NASDAQ was off 522 points. And then so, again, when the Fed minutes came out here, reversed and slammed the market once again. So it's just, we're having gap up opens, fading to bad closes at the end of the day. It's just a pattern of weakness. Friday sort of broke that pattern for a day and actually closed up, didn't have that end of day weakness. Maybe there was short covering going into the weekend, because shorts covering are buyers, so that can push prices up, but no way to know that. Some of them may have waited till that last hour to cover before the weekend, thinking the market was going to sell off again, and it didn't. So there were more buyers than they thought there were going to be, perhaps, but no way to predict on that. So these things just, nothing pleasant here yet, except we did have the rally days on Monday, which on the NASDAQ was the 4th rally day we've had so far, was the 2nd day on the S&P 500, and I put it as the first rally day since, I'm kind of going back and looking at the prior ones and looking at those. So we've had some failed rally days already. So go to group teaching portfolio. We're only 17.8% invested. Started out the year bad, down 6.55% for the year, which is really for the month of January. Of course, this weekend on Twitter, I noted where those funds in the IBD mutual fund index are. Most of those were down 15 or 20% year to date, because they don't have the luxury to move to as much cash or as quickly to cash also as we do as individual investors. So we only have a couple positions, and some of these are just pilots, and Regeneron and TQQ was Friday, just trying a strategy there. And again, it's just a 10% position. So pretty much just waiting, mostly cash. That shows us, and in fact, if we look at the details sold in the spreadsheet, so the realized losses are 21,000, but since those were sold, those positions have gone down another almost 59,000. At one point, it was up to like 70,000 on one of those days when the market plunged intraday. I just glanced at it and saw how high it had gotten, but still, that's a tremendous loss if we're not following the stop loss rules and keeping losses small. You can just see the damage that would be done in 1 month. I mean, that's some that would wipe out your mental capital, as well as $59,000 of actual capital. So you don't want that to happen. So let's go back. We covered that, looked at the group teaching portfolio. Okay, so we're good. Get back to the big picture. So in light of that, lots of red light, still train wreck out there. Monday is day 6 of a rally attempt on all 3 indexes, the NASDAQ, S&P 500, and the Dow. I still think it's going to take a lot of time or work to clean up this mess. And the real problem is we're missing proper setups. The best follow-through days will be accompanied by Canslim growth stocks set up or setting up clearly, past the bottom of the base, building a nice right side. That's what you will see during the best follow-through days. Also, we have some headwinds, bad weather ahead. Fed minutes, I think we get those in 3 weeks. You remember those started, again, the first wicked Wednesday of the year was on the Fed minutes. And then we'll have the March Fed meeting will be coming up mid-March, which should be the first rate hike. And then you have the Fed talk in between with all this. How many rate hikes are we going to get? We've got Russia and Ukraine, got China and Taiwan, and then we've got COVID still going on, variants spreading, supply chain issues, chip shortage. So there's just a lot of uncertainty, and the market doesn't like uncertainty. I mean, if the market knew, hey, we're going to have 4 rate hikes this year, okay, not good news, but the market can price that in and come up with some stability. Right now, that's all over the board. I mean, we went from the Fed last year, they said what? No rate hikes in 2022. Now we're at 3 or more. Said we're not doing tapering and the balance sheet reduction together. Now they're doing all 3 at the same time. So those sort of things are just creating a lot of uncertainty. So I've got another train wreck picture for this weekend. I'm sticking with that. Current trading plan on the buy side is still, no for now, but could get a follow through day. And Bill's rule is we do have to increase exposure, even if we go gently, in light of all the negatives I'm seeing. But I would increase exposure if we get a follow through day. So it's, we might get the maybe button this week. We'll see. So we've got the rally day. We're looking for the follow through day. I'd like to see all 3. We have the rally day. I'd like to see follow through day, and we need the setups. And setups is where we're really lacking. Also, would be nice to see more in the fear indicators. See the put call spike. The bull bears crossover. That's an excellent sign that we're near a bottom. Fear greed index. I want to see the buy the dippers give up. A lot of them are calling a bottom already and getting back in. And then do we get a third leg down, which is more typical of bear markets to have, 3 or more legs down. We clearly had that if you go back and look at the fall of 2018 bear, which was kind of brought about by tariffs as well as taper talk by the Fed. So that one was kind of the Fed talk bear, and now we're in the Fed walk bear because they're walking the talk that started at the end of 2018. So let's just go. So the CN's in fear and greed, when this gets down in extreme fear, maybe we're getting close to the bottom as a contrary indicator. And then the IBD ones are under the market trend psychological indicators. So if we look at those, they have the high-low ratio in there that's kind of like what Matt Caruso has, and I have him in here, so I'll show you that. Put call, we still hadn't spiked up to that 1.15 level is which they really treat as extreme. So you want to see the fear really get up there. And then if we look at bulls versus bears, if you go to the print button, you can get a bigger picture. You can get both bears in there. So here was the fall of 18 bear. It ended right after the first of the year. So you can see they crossed over there. The bears exceeded the bulls, and then the same thing here happened at the bottom of the COVID bear. So when that crosses over, hopefully we're seeing setups, and if we get a follow through day after that crossover, hopefully that's one we'll have a little more confidence in, particularly if we are seeing the setups. And if you follow Matt Caruso on Twitter, he has this chart where down at the bottom, he shows when it's the red bars going down, that's how many more new lows you had over new highs. And so the green days, you had more new highs and new lows. And once he gets 3 days in a row, he shades the background either green for sort of a good, strong market environment, or pink for a weak market environment. So that's just a nice general indicator. So I do follow that and track Matt talking about that also. So we'll continue to watch for those things. I put this in every time now because it's just so important now. Canslim works better when the NASDAQ is trending above an uptrending 50-day SMA line. It works best when the NASDAQ is trending above an uptrending 21-day exponential moving average line. And then after that's gone on for a few days, the power trend will turn back on in the market school model. So we're still in a hostile environment. We're very far away from either better or best when you look at the charts. So let's jump back. I did note this past week, so as opposed to the first 3 weeks of the year, the market totally trashed my top tier watch list, just almost right off the bat every week. So this week, at least it didn't get trashed. So that was a little bit of improvement, but it's kind of akin to lipstick on a pig is what I put in there. So if we look, let's just look at a couple that I had on my watch list. So Pfizer, kind of seeing if it'll set up and form a new base here. So it made some progress this week. Regeneron kind of in a double bottom here, and it's also officially in a only 12% deep flat base. So that's a constructive shallow flat base in all this mess. DAC, this one broke out this week. You know, that one's in the shipping space. Deere is kind of setting up, got a real long consolidation there, 18% deep. Zim, I think it's extended, right? Yep, it's extended. So Fang, held up this week, so that one didn't get killed. Again, not buying, but we still do a watch list every weekend. Good RS line. So that's real different than if we go back to like that first week of the year, go to the top tier watch list. I think I put the orange, yeah, so over the weekend they look like that. And when I put them on the watch list, and these are the ones that immediately got trashed that first week of the year. And that happened for 3 straight weeks with my top tier watch list. So you can see all of those. They were looking fine that weekend, and then wham, got killed as soon as January started on all these. Not in any of these, none of them triggered entries. But the market really just creamed those coming out of the gate, which was another signal, because that usually doesn't happen, not to the whole 3, 4, or 5 that are on the top tier watch list. So we'll continue. You always got to have a watch list, ought to be able to get ready in case we get that follow through day. So our meetings, go back to that. So we last met January 11th. These are the big monthly educational meetings. So this is what we covered. If you didn't attend, we talked about the M Factor, Canslim nuggets, talked about new market Smith tools, and then we covered, really we did more than 5 prior bear markets in detail, just looking at the patterns, how deep they were, how long they lasted, how they set up, how many legs down, to kind of see what we might be in now. And then we did some post-analysis in the group teaching portfolio, and we'll kind of do a little bit of that every month from here on out. We talked about the IPO markets, talked about watch list stocks, and then I do open microphone Q&A stocks y'all ask about at the end of the meeting. So our next meeting is Tuesday, February 8th, 7 p.m. Eastern Time. These are online. If you don't attend, you don't have to attend live. You still get the recording and the slide deck if you sign up. You sign up at the Stockyard Meetup site. Tuition's $12 per meeting. If you want the materials later down the road and you didn't sign up for the meeting, it's just a slightly higher fee because I've got more time in getting all that stuff out. But as long as you sign up for the meeting, you'll get it all. So that's the best way to do it. And if you're a first timer, I send you a courtesy copy of the January meeting, recording, slide deck, and all the links I sent out to related articles after the meeting. So the agenda for February, obviously we'll do an update on the M factor like we do every weekend, maybe a little more detail. I'll give you some IBD live golden nuggets that have come up since our last meeting. We'll look to see if we've had any viable gap ups during EPS season. We'll look at the group teaching portfolio. We're going to look at the sold list every month because post-analysis last year showed some of those that were sold set up later and should have been re-entered. Educational topic, we're going to talk about the RS line, which is really your best friend now. We'll also talk about the magic act by the IPO market because it has disappeared and it's just gone. So I'll just comment on that briefly for right now. Last week we had one IPO, next week we had one IPO. The same time last year, we had 8 to 11 IPOs every week on a regular basis. And I'm only talking about IPOs. I don't count SPACs. I don't even treat them as IPOs. So those were true IPOs. And so now we're down to one last week and one this week. And that's just another sign of a weak market. And there's several that I think there's been at least 3 that got yanked at the last minute this year. So that's another sign of a weak market. And then we'll look at the watch list from next weekend, the most recent one, and we'll do chart review and we'll do Q&A. So here's a list of things we've covered at the prior meetings. If you don't have a set of written sell rules, you really need one. I spent 3 meetings teaching on that. It's very detailed and it walks through all 3 sort of trading zones on the Market Smith chart. So if you don't have written sell rules, great time to study and write those going into this year. And then other things we've covered, holding through earnings season, did a complete weekend routine and how to build a watch list in September. Followed up on that in October and then did an extensive segment there on the rally day and follow through day system. So if you have a question about how that system works, I covered it in great detail. Steve Sweat showed up and did a little segment on early buying rules where maybe you get in after a rally day and through the follow through day. So that was a really good meeting also with education on that topic. And then the other ones, the topics are on there. As I said, we did the bear markets in January, but if you're a first timer, you can get that one free if you sign up. So the meetup sites look like this. This is the Greenville East Side one. This is where all the resources are loaded under the More tab and the message boards, but they've been down this weekend, so they have to fix that. To sign up for online meetings, you do that at the Stockyard Meetup site, which looks like this. And then I have a YouTube page where all these videos are loaded up. And there's some other ones, our full meeting from May last year's on there. So you can go watch all those. In fact, it's funny, if you walk through the pictures, I just noticed this. So if we go back to last year, just kind of going through the weekends. So we were good. The go button was on, it was lit up, market was doing okay, came into the end of October. Then we came into mid-November, I had a yellow light and a green light. So there were some warning signs, then red light, get a little further in December. Okay, maybe we can start wading back in. Sort of this, then it's like, well, got to think about it pretty hard. Then it was maybe, and then the first weekend of the year, things were looking good, and then those watch lists got trashed 3 weeks in a row, and the market fell apart. And we'll have a train wreck picture again this weekend. So it's interesting to walk through the progression. It shows up pretty quickly what the market was doing in my cover photos, and I just sort of happened to notice that this weekend. So you can get everything there, and you're watching this video there. So do subscribe while you're there. Make sure you like it if you don't mind. That helps with all the algos and how many people view it, that sort of thing. So if you're interested in prior meetings, you can send me an email. I will send you the list and the ordering instructions, and you can order them. There's the website. You can follow me on Twitter. I use that mostly for Canslim educational type stuff. And then, like I said, Oh yeah, our whole May 2021 meetings on the Stockyards YouTube site, so you can watch that. There's a video on there about the 8-week hold rule, which really isn't a rule. I finally did that because that's just such a confusing area in Canslim. So you can watch that also. And there's a teaching video on the group teaching portfolio if you want to use that. So that's it. We don't know what this year's going to bring. Currently, clearly growth stocks are in a bear market, even if the whole market's not officially in a bear market. Hopefully it'll clear up at some point, but I don't know if it's going to be, 1 day, 1 week, 1 month, 6 months, or longer. The bear market back in 2000 lasted 2.5 years, but we're not in exactly the same situation now. So hopefully we're not in for that, but we'll be prepared for anything. So that's it. Y'all have a great weekend routine. Keep doing the work. It will improve at some time, and it will pay off if you've kept up with the work. So that's it. I'm out of here.